Good morning. Happy Thursday. Everybody survived another FOMC announcement meeting, the excitement, and we're coming to you live. It's time to start the show. Here we go.
Every morning at 8:45 Eastern, Option Omega's got your back. Troy's dreaming big like LeBron. Matt's backtesting like a daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mine, digging deep day by day. But when Option Omega releases new features, he's free to come out and play. Option Omega, you're trading home, where every move makes you feel less alone.
Do. How's everybody doing this morning? It has been a great start to the week, I think. And the markets, let's take a look. We are up, let's see, 42 points in 2025. What's a 42-point move pre-market? Is that a lot?
Forget that 42-point move. We were up. I just saw this. Like when we started that music, we were up 35 or 38.
That's
like
right.
Those are huge swings pre-market right now. The 4 or 5 points a minute. I mean,
the algos are tuned into this show is the obvious conclusion that most people would have. You know, when Roaring Kitty came back and did a live stream, I think it was last year, after years of being gone from the GameStop meme scene that he was a key figure in. He got on this live stream. It was very unique. And I watched it at the time. And one of the things he did was he said different words to see if he could trigger, allegedly, I mean, seemed like he was saying different words to trigger algorithmic behavior. And so my question is, do the algorithms just love blues guitar? Because
Why wouldn't
like that's just the question, because you look at this and you see, yeah, we're up 13 points since the blues guitar hit the scene. So I mean, who can know these things?
Hey, I'm in the blues capital of the world, Chicago. So hey,
it's authenticity.
it is.
And coming from this option, and again, I'm going to mute a lot today. Sorry for the. I tried to find the most annoying place in the world I could do the show from to put on YouTube. Thank you. So,
congratulations.
The OIC at this conference, one thing I can tell you from just showing the insiders is Citadel, all these firms, their morning meeting, they don't even meet with people now. They just tune into YouTube's Option Omega show.
Why
It's
would
interesting.
You can tell that from our viewing numbers.
Yeah, that's right. The 29 people watching right now are Citadel.
That's right. Raise your hand, Citadel, in the chat.
Citadel, that's right.
Shout out Citadel.
Yeah.
So Troy's coming to us live from a construction zone. Dan's in the options capital of the world, and we're talking markets, everybody. So yesterday, kind of a interesting day. So yesterday was a Fed meeting, and you know, CNBC, you can argue how useful certain things on CNBC are as a signal, as a counter signal, as a news source. But you know, I think the opening sentence of this article kind of sums it up. They say the Federal Reserve kept interest rates at the target rate of 4.25 to 4.5 at the conclusion of its May meeting. And the FOMC noted that risks of higher unemployment and higher inflation have risen. And the market responded by having a day that, quite honestly, doesn't look that different from the kind of day we've had in the last, 4 to 6 weeks, right?
Yeah.
Maybe even a little longer. And compared to a lot of the days post-Liberation Day, kind of a muted response. Fellas, what do you think?
Yeah, for tremendously slow. Looking at reverse iron condors, at least I'm like, hey, we need more than this, but we need a little bit more help from this. But it's interesting. What's interesting to me is it looks like at the opening, we're going to be in the 22s in VIX. And when you look at that, you'd say, well, historically, that's a high number. But if you look over the last 5 weeks, 6 weeks, we're at the low end, right? I mean, we hit 17 maybe 7 weeks ago, 8 weeks ago, or something like that. But I still think we're in this range, right? This range of VIX, a higher range than we've been historically. I think it's more 17 to 20 on the low side, 30, 35 on the upside. But this is like, I don't know. I think of, what was that? Was it Princess Bride that had, or what's that? Torture by 1,000. What's the saying? Torture by 1,000
paper cuts
or something.
I don't think that's Princess Bride.
I don't know.
Help us out. Somebody in the chat knows.
It fits my analogy. I don't know what movie. It probably isn't from any movie at all. But I think of this as I'm looking at this whole tariff situation. It's like, okay, England, right? You have a conversation. Is Monday going to be South Korea? And then Tuesday will be Vietnam or whatever. I don't know. But all I know is that, you know what? This ain't going to get done in 2-3 months. There's a lot.
Right.
So,
right.
I mean, what's nice is you'll, from a trader, you'll have some premium, right? I think it's safe to say we'll have some level of premium hopefully through what's the 90-day pause. Would that be in July, Matt and Troy? Is that when this big number, whatever it means?
Man, to be honest, I've totally forgotten, but you're right. If they did 90 days, it'd be April to May, May to June, June to July. So some time, and that gives them, plenty of time to negotiate. And these negotiations started, I would think they started before the tariff announcement, right? If not, they started that night. So probably well before the announcement.
Let me ask you, Matt, is there any news that, all right, they got this thing done with UK. Anything as to any details of the UK thing, or is it just kind of a...
Does the ES care about details at this point, Dan? I don't know. But I mean, when you have words like comprehensive thrown around, it sounds, I don't know. There's supposed to be a press conference this morning. Yeah. So we've had some Thursdays that have been kind of boring. Maybe it's time. I don't know. Troy's an inside day shot caller. Troy, what do you think of tariff press conferences during the day?
I think this whole thing, this is crazy how loud this construction is. I'm so sorry. But listen, I think the whole thing, really, this up move this morning, you can blame it on press conferences or anything like that. This up move is clearly the market wants India and Pakistan to go to war. That's everybody's.
We have not talked about that situation.
Yeah, the market looked at India and Pakistan going to war and said bullish, which is
right.
It's a strong disagree. But I think it's funny to the point of what the market cares about. But my thing with the tariff stuff at this point is that they're kind of doing it. See, I don't know. Once you announce tariffs all at once and the market drops all at once, I understand the logic of saying we're going to piecemeal it back together with these deals through time, and that'll slowly make the market go back up. So we're going to do the UK, we're going to do India, we're going to do all this stuff. I don't think it's going to work that way. I think that people are going to fade this.
I agree.
Yeah.
I agree.
Interesting. And just at a super high level, I think off the top of my head, we started the year in the 5,900 range with SPX, pumped up to all-time highs.
Yeah.
You're having something major go on that could kind of fundamentally change how global trade works.
Mm-hmm.
And the market's reaction was a crash. I think can we call this a crash? Can we call this a crash, Dan?
Yeah, maybe a 22% move or 20% move. Yeah, I'll go for a crash. Yeah.
I feel like shock. Shock.
Okay.
The market. That's the shock. Crash.
mini crash.
Because the
And
speed of it, yeah.
Yeah. And then you look at it now, if we open up close to 5,700, it's like, you know, what
What's the point?
No,
yeah.
I don't.
So to your point, it does feel like with the scope of the potential change in one hand and knowing that the market doesn't like certainty on the other hand, it does seem like there is risk of movement, maybe more to the downside.
Absolutely.
But to circle back on a really important thing, we asked about Death by a Thousand Cuts. The chat informs us that that's a song by Taylor Swift. A quick Google search would say that that wasn't the origin of the saying, that is probably an ancient Far East or Near East saying. But shout out, Glenn. Thank you for
I would like to
info.
think it's in Dan's subconscious via Taylor Swift.
It could be
a 65-year-old guy from Chicago.
That's right. T Swift. Just wearing those T Swift t-shirts after the show's over. Oh yeah.
I'll get my voice book. Yeah.
Yeah. Shout out Tom Lee. All in on nifty calls, the Indian market.
Yeah, so this is something interesting, and maybe we have an expert in the chat. We're not experts, but you know, obviously we've focused on most of the activity in OOs around the S&P 500 index options, but India has a tremendous volume on its options index and just options activity in general. And so yeah, it'd be interesting to maybe talk about that one time. But Troy, how's the can you give us an up? Troy's running the jackhammer on the chair next to him. I can tell by the mute button and his face. So what we're trying to do with the OO show is bring you live content. So I mean, we're in an industry conference. Unfortunately, the the construction is also at the industry conference as well. So so Dan, what do you think about this positioning? We'll say we're around 5,700. You're right that we've kind of solidified here. If you look at the daily chart here, here, let's pull up a daily for the S&P. I mean, let's see, how long have we been in this range? Not as long as I thought, but we've kind of, this is kind of the range that we were in right before Liberation Day. So April 2nd, we were like literally overlapping where we are now. And then after that is when we had really 5 days where there was just insane movement, a little bit of pump, more movement, and then we've consolidated. So in the span from April 2nd to May 7th, so a month, what's happened? I mean, we're back where we were. So I think the question is this just a kind of a pause before the market decides if it's going north or south?
Yeah.
Or are we going to chop here?
My vote would be more chop. I mean, the candles have slowed down in terms of size tremendously. We're, going along with what Matt said. I mean, we're a little over 100 points from the 200-day moving average.
Yeah. Are we above it or below it? I honestly don't
we're below it at this point, but I mean, we're, 100 and some points. That's spitting distance these days.
Yeah.
That could be quickly. So, I mean, I would look for more, I'm thinking over the next week, unless there's, the downside to me is what I'm concerned about. But I would say maybe, a low of 20 volatility, maybe a range of 20, but
yeah,
could we hit 30? But I think more chop. I think you'll get some more chop, some range bound, which we haven't had a good range bound period in a while. And
just, to remind people that VIX has to have movement. It has to have activity to stay up. And
that's right.
If the activity slows down, VIX is going to contract. That's just how it functions. That's just what the math is. It's just what it does. So when you look at a day like yesterday, which was an FOMC day, and it was a pretty full scale of FOMC. Some days you don't get the full buffet. Yesterday you got the full buffet. The high was 56.54. The low was 55.78. So a decent range. But if you look at the day before, the low was 55.86 and the high was 56.49. And somebody can do the math and tell me, but just eyeballing the math, those days are pretty close.
That's
And
right.
you just look in the span of the last couple of weeks. And if you were just looking at this chart agnostically without knowing what was going on, I don't think anybody would have said yesterday is an FOMC day, which would give, you know, kind of a little bit more credence and a little bit more data to this idea that maybe in the era of Trump 2.0, that the FOMC, while it still matters, is fighting for news attention and market attention with other sources, i.e. tariffs, press conferences at 10 with a comprehensive plan on UK-US relations regarding economic exchange. You know,
that should be more entertaining maybe than the market today with if Trump's leading
yeah,
that, if President Trump is leading it. But I'll be honest with you, I don't mean to switch subjects. I just want to say I'm gonna digress really quick.
Do it.
But I want to say that going along with this whole idea that the size of the candles have slowed down a bit, I'm looking in the last month, ATR, the average true range, which measures the distance between the high and the low, let's just say of SPX, that on April 10th, about a month ago, I'm looking at it, was about 198, let's call it 200. Right now it's 126. So that's just saying this, the distance between the high and the low, which was getting crazy numbers, 200, 250, 300, all those crazy numbers. We are calming down some, right? I mean, sure, we could have a movement, a move or something, but I think we're getting more in the range bound. But I was saying, here's where I digress, and I don't mean to, we don't need to go far off the digression, but it has to be mentioned. Bigger news today, in my estimation, than anything going in the market is the New York Knicks have taken a 2-0 lead over the Boston Celtics. NBA conference. I mean, twice they were down. If I read real quick today, they were down by over 20 points in both games, and they came back. I mean, could you imagine that, the Knicks sweeping the Celtics or something like that? And I would imagine the first two games.
Oh my goodness.
So I don't mean to digress, folks. Watching.
Let me just say this. Our standards on the O show, as you know, most professional show in the world, which is why I'm wearing a t-shirt, but I am wearing a Pacers t-shirt to prep for the game tomorrow because this is NBA playoffs. So for a quick 2 minutes, sorry if you don't follow the NBA in the US, but we have a trend following that. I think in this round of the playoffs, I don't think the home team has won a certain game. So that will be put to the test in the next day or two. Right. And yes, the New York Knicks, I mean, there's some things that I love in the world. On the list is watching cities from big teams on the coast lose. And the thing for somebody like me about a series like this is when it's New York and Boston, I'm guaranteed to find some amount of satisfaction because one of those two teams will lose. Yeah. So, Troy, how's the construction zone treating you? Yeah. We're going to get ahead. Oh.
It just stop right at any moment. I mean, here's the thing. 2 thoughts with the basketball, then we'll get to testing. One, this is working out for the Pacers. I mean, this is like a gift handed because you don't want to play the Celtics. And so, New York to me is one of those teams until they win a championship. They're like OKC to me. I know they've won a championship historically, but so if you're the Pacers, you got to love what's happening. You got to absolutely love what's happening. 2, I mean, listen, as a LeBron fan, I'd say if you guys are still playing basketball in the playoffs right now, and not taking the summer off to rest and recoup, that's stupid. You know? So that's all I got.
All right. Well, let's look at a back test. So, Troy, if you got a second to look at this back test, hang on, I'm having an issue. Let me try to reshare it, and give me just one moment here.
Yeah, sure. If you guys want to listen to the sounds of
not the sounds of silence, that's for sure.
Mind grating.
I like a good jackhammer.
Oh my gosh, yeah. That's my sound machine at night. That's I'll say this also real quick while the jackhammer's going. Palm Beach. So I drove to Mar-a-Lago. It is a fortress. It felt more protected than the White House. Now, I know the White House has a lot of stuff that you don't see, and that's always a good, the White House is kind of set up for all their security you don't necessarily see. Mar-a-Lago, it is a fortress. And
Wow.
so, but to be that close to the throne of power, my goodness gracious.
Like specifically, Troy, what would you say? What kind of came to your attention? What did you see in terms of like a fortress security? What did you see visual? I mean,
a lot of those police towers surrounded by there. A lot of just moving traffic. So it's kind of like on the water, and they're just moving you around where you're having to go way around it. So you can see it, but you're not getting anywhere close to the gates.
Oh, you're not driving. So what if you want to stay at the hotel? Is that a certain?
I have a feeling. I was wondering about this. I bet you do have to just go. Like you have to just tell a police officer, I'm a member. I bet you just show a card. I bet probably at this point, honestly, the members. There's only a certain amount of members. I bet they've been so security cleared that they've got badges and stuff like that. Like imagine if you're in Mar-a-Lago, you probably have security clearance at this point.
So it's not a hotel like you could go there, spend the night. You could just.
Oh, I don't think so. I think you have to be a member to stay at the hotel.
Wow. Okay.
Yeah.
Okay.
Yeah. So it was quite the experience. Matt, do you need me to share it?
Yeah, I'm having a little bit of an issue here. So yeah, if you can share it, that would be great. We got a back test to talk about. I will talk about this here for a second.
You sure you don't want me to just with the jacket?
So this is a sell in May and go away. And what we have here is a 1-3 calendar. It's just a single calendar, not a DC. It's just a single calendar. And so what we are looking at is at 9:45 in the morning, and we've just done this over the last 5 years. So on if you can pull up the trade log, Troy, that would be great. On Monday and Tuesday, we're looking at this 1-3 structure. So what it does is you enter a put calendar. So it's to the downside because of the deltas. It's out of the money to the downside. And you have a pretty quick, aggressive profit target on it. And it's if you scroll back up, you can see it's 5 years, Monday and Tuesdays for 5 years. And you're trying to get 10%. We've got some Punisher on. Listen, we'll do a lot of content on the Punisher, but the Punisher is the miscellaneous options at the bottom of the back test. And you can turn on various choices in the Punisher to punish your back test to make them more robust. So in this case, we've got both entry and exit slippage. We also are capping the profits at exactly 10%. And we are requiring that profit target is hit 2 times in a row. And if you look at, Troy, if you can look at the one that just happened yesterday, actually, it looks like it would have gone on yesterday morning and hit its profit target yesterday morning. So
that was 2 days, Tuesday.
I'm sorry, my days are off. Tuesday morning. Monday, you would have put it on and it would have taken till Tuesday to hit its profit target, but on the spicy move down, which we had on Tuesday morning, going off memory here, you would have hit that PT. You would have been over 10% because it's a opening profit target. We don't cap that, but this law gives you an idea that what Dan, what would you what do you think about this? I mean, it's a kind of by design. This is showing a concept. It's a fitted test. We've got 30 examples, 5 years. What does this? Can you glean anything out of something like this, Dan?
Yeah, I want to. Let me ask one quick question. So before I give 2 cents, obviously 33 trades, 33 winners. What is the filter that is? Why is it not showing more trades? What am I missing here? This has gone from 2020 to 2025. Why
right. So he's just doing Mondays and Tuesdays.
Oh, I got you.
Well, even more than that. Yeah. So this is a continuation of what we talked about, the sell in May and go away. So these are all the Mays for 5 years.
Oh, I got you. Okay.
Now, so that altogether is over 100 dates. So why 33? Well, because the way I'm doing this test, again, there's a million ways to look at this. I'm using specific dates. So you have to use the specific and pre-dailies. The only way to get a 1-3 was really opening Monday, Tuesdays. So those first couple of years are going to be, well, really even with the 5 day, it's going to be Monday, Tuesday most of the time.
I got you.
So you're just limited.
Yeah, I mean, two comments. Two things I'm thinking about. Number one, I like these out of the money put calendars, right? I think they seem to hold up pretty well. A 25 delta out of the money put calendar. I just like those trades to begin with. The other thing, what's the thought? When you have two thoughts and you get to about 65 years old, you better get those thoughts quick or write them down, because you're going to miss the thought. So I might, if it comes to me, I will let you. I like the profit target of 10%. It's showing it's a pretty quick. You get out of this, and it only picked up. So you only had 2 trades in 25, right? May 6th and May 5, right?
So far, yeah. Actually, let's see here, just to double check that. Yeah. So far this year. Now, here's the thing, Dan. To the point, I don't trust a trade like this. You say, well, why are you showing it off? Because this is an idea generation. Again, we're starting with this thesis of thing, sell in May and go away.
Yeah.
But I'll tell you why I don't like this is, you look at 100% win rate. Well, what would make this trade lose? Any move over 1% to the upside. I mean, that, or maybe 0.5% to the upside, depending on the time of day. Like, it actually won't take much for this trade to lose if it's just the put calendar.
Yeah. And you can see the drawdowns. To that point, I'm interrupting, but let me just explain something real quick. To that point, even though there's 33 trades and 33 winners, the reason there's a drawdown is because there's some overnight activity that gets measured in the drawdown. Troy, if you click on the example from Monday, you can see that one, that one right there. What happened, the reason why that chart looks so crazy is on Monday, that trade was hurting. We don't have an exit condition. And then what happened is we opened up at the open, gap down. That trade loved it. And that's why it hit the PT. It got what it wanted, which was a spicy move down right at expiration, or on the expiration day, not right at expiration, but it would have been a 0-2 at that point.
Well, and the other thing I like about the 10% is, we forget here at times, this is loaded with positive theta, right? If you're doing a 1-3, right? So even if we're, a lot of times you can get out of this, and theta is oozing when you're selling a 1 day out, buying 3 day out. You can make silly amounts you can get out quick, even if it goes against you a bit. You're winning if it goes down, you're winning if it's neutral. You have some room to the upside, right? As long as, like Troy said, if it's not too big of a move up. But I like the positive theta. I did a trade. Well, it's in the ballpark of this Monday. I did a small trade. I was looking at, okay, we have the Fed move coming on Wednesday. Let's do a double calendar. Matt could, or Troy, they might have had double calendars on, but I sold one for on Monday, sold Wednesday, bought Friday.
Okay.
And did the double calendar. And I think it got a little lucky. The down strike was 56.30. I think the upside, I forget what the upside strike was, but by putting it on Monday, we had come down from the 5th on Tuesday. We went, I don't know what the low was Tuesday. We came down. I actually took off the upside, and then we kind of glued to 56.30. And I was amazed, because again, there's only 2 days of it. I got the 10% profit like you had here, but But when I looked at the end of the day, and that's what I need more patience on these double calendars, like Matt says, at the end of the day, I was heartbroken.
Yes.
I mean, because we glued to near 56.30, and I got out of the 56.30 put calendar. I forget but it was 11% profit on the whole thing. But when I looked at the end of the day yesterday, I was almost crying. It was like $20. I mean, it was like silly amounts of money. And you say, is that realistic to expect it? No, but there's, you got to let those things go a bit. And that's why I like, and that's what's encouraged me is seeing the data that Matt and Troy and Rusty have done with Options Omega on these double calendars. You got to let them breathe, because you can get, would you say on average, Matt, or could you address, it's not a pipe dream that you can get 40, 50% on these.
No, not at all. You can also lose 50%, which probably happens less common, but a lot of people have not seen that. And you can actually lose more than that. And in a black swan scenario, you can lose a lot more than that. But in general, under a normal circumstance, 40 to 50% profit target is not uncommon. It's a lot more common than a 50% loss, I would say. And it's just, they're complex beasts. So the VIX environment has a lot to say about it. And the VIX environment, when you enter, has a lot to say about it, both when you enter and when you exit. And that's one of the nice things about the back test is, there's, as you say, you can only really lose a couple ways. You can only win a couple ways. And so a lot of folks, when they back test, they have a exit condition with rails. And if it gets too far, especially early on past the polls, that's a big problem. And oftentimes an even bigger problem is a vol crush scenario where the tent just collapses and those profit poles fall to the ground and there's just not much there. And there's several ways you can back test that. A lot of people will use a VIX move, a VIX 9-day move, a short long ratio. Like there's a bevy of ways, because one of the things about these DCs is if you watch your broker, they're very complex beasts. If you watch your broker, the live price in the market, it's rare, but over the course of a trade that's on for thousands and thousands of minutes, you're going to see occasional blips in the price. And so the rail exits and the short long exits and the VIX change exits are a way of exiting the trade based more on the underlying rather than the price on the screen, because the problem with the price on the screen is there are times when the market has a moment of illiquidity on one of the legs and the price just goes wonky. So, you can see these prices flash up on their screen and then they immediately flash off. And wait, what? Did that just move 70% in a second? No, it did not. But, so people who automate these, as again, not financial advice, but people who automate them often choose not to use a stop loss, because the stop losses can get triggered by a moment of illiquidity that's not legitimate. And that's why using delta exits or exits past or any of those other types of exits that I mentioned can often be a good solution. But listen, Troy's wrapping up the construction project. It's 9:20. I think people have trades to wake up, maybe some trades to put to bed, maybe some trades to put out to pasture. So we're going to come to you live. Troy, can you give us a indication tomorrow? Are you going to bring the jackhammer? Because Tom in the chat has been I actually read, and he said, Troy, go give the jackhammer guy $5 and tell him to jackhammer more. So, is that? Can we make that?
Listen, this is. I'm on 3 hours of sleep, so this joke might be off color, but I'll just say it this way: I fool me once of handing dudes money and mentioning anything with jacking. So that's
this may get cut out of the edit.
3 hours. Hey, listen, shout out Tom. But that's the listen, guys. I'm going to go try to find Eggs Benedict. That's my mission today.
To go find what?
Eggs Benedict.
Eggs. Okay. Good luck.
Yeah.
Let us know how it goes.
We'll see you back live tomorrow from different locations.
All right.
Thank